Hello, folks. Brandon Chapman with you today. It's another edition of Theo Night Video for Monday, January, what is it, the 24th, 2022. Crazy day. I guess the number, if this was Sesame Street, would say 4.7. I mean, that's about the percentage rally off of today's intraday lows on the futures. We stretched as low as around 42.10 on the session before rallying. Currently at 44.10 as the market's closed here about 15 minutes ago. So huge rally off of the lows. And we went from skid to bid as the FOMC statement looms on Wednesday. Currently, we'll look at some of the expectations there. We'll look at some of the intraday trade and some of the reversal today and the early indications of reversal, including unusual option activity. Anyway, so as you look at the S&P, we'll just look at this on an intraday basis, a 5-day, 5-minute chart. You'll notice right around 10:25, it began to kind of find support and rallied. Short correction here, then rallied again to basically finish higher in the session by 0.41, 0.42%. Pretty astonishing when you consider the fact the VIX today did spike dramatically. As Don has talked about quite a bit, if we take out the lows, we should see the VIX spike above the highs. That's what we did. Who knew it was going to be for one day? Now, the question is this the end? Is this the last of the sell-off? And we're going to just continue to just run higher to finish the week and into next week. Of course, those that have said, hey, you know what? Don't fight the Fed. We got to buy the dips, etc. I mean, that certainly would suggest that this is a time to buy. The question is, has things materially changed in terms of the outlook for the market? For those that once said, don't fight the Fed, are they now fighting the Fed by being bullish? Now, certainly there were some indications today of capitulation. Let's quickly take a look at ARK. So ARKK, that's something Dom was looking at this morning. Actually took some bullish trade in anticipation we might get a bit of a rally. You'll notice it started to bottom out, kind of around 9:50. That's my time this morning, Mountain Time. Kind of found a little bit of a double bottom there at around 10 o'clock shortly thereafter. And then we started to see the rally, the breakout towards 1040. And of course, if we go back to /ES, the futures here, when did we really kind of start to see a bottom? It was right about the same time, in fact, a little bit later. So what you saw is that ARK ended up kind of forming a double bottom here off the 950 lows, whereas the S&P stretched to new lows. So again, there was maybe an early indication that one of the areas of the market that's been so bearish in terms of these stocks that are part of the ARK fund really kind of gave an early indication of a potential reversal today by virtue of its intraday trade. Now, beyond that, let's just take a look at advancing to declining issues. In this case, declining to advancing issues. What this means is we're looking at a ratio of the two, and for that ratio, I have to bring up a pairs ratio study. And what you'll notice is that early on today, this ratio spiked up to about 15, meaning there was 15 times more declining issues than advancing issues. You back this out to a much longer time frame. We'll go out 20 days, 15 minutes, and say, okay, you get a sense of how bearish it was today in terms of the breadth. Normally a value of a 10 would be, particularly if we can close there, would be very impactful. You notice we didn't finish there today. But intraday, early in the session, we reached about 14 or over 14. Again, what it showed was there was a lot of selling right off the bat this morning. If we look at volume as well, $DVol, that's down volume, plus $UVol, we're looking at a ratio of down volume to up volume. You'll see again, early on, it was nearly 22, meaning what? Meaning there was a significant amount of volume on down shares. So meaning that a lot of down stocks and a lot of volume on those stocks, about 22 times that of the advancing issues. When you start to get above 10 here, this is emblematic of a very capitulative type of event for the broader market. And again, it was intraday. We didn't necessarily finish there, but again, it's an indication. You look back 90 days, the last time we were anywhere close to this, at least on a half-hour closing basis, we would have to go back to around when? November 26th. Okay, so that was a long time ago. But again, it's just emblematic of the amount of bearishness, amount of selling that happened early. And sometimes it's so bad it's good. Now, when you say that, again, we still have to keep perspective here. Is it possible that we could see a rally in the market over the next few days? Absolutely, right? The question is, where do we finish the end of the week? With the Fed statement coming up on Wednesday. Okay? what's the probabilities that the Fed may raise rates? And the reality is it's not all that high. For example, we'll just look here at January 26. You'll notice there's about a 96% chance that they're priced in right now. The Fed holds the rates the same from 0 to 0.25%. Now, as we start to go to March, you start to see a different expectation, as really we're seeing 81% probability of a Fed rate increase and a 5% chance of a 50 basis point increase in the Fed funds rate. So nobody's really expecting the Fed to raise rates on Wednesday. What matters most is probably the language. And as you look at the product depth here, this is the ZQ. What you'll see is this yellow line was last Friday. The red line is today. And so what happened by virtue of the selling today, it didn't really change much in terms of expectations going out in the near future. But as you start to go out to 22 and 23, what you're seeing is the market saying, are we really going to continue to raise rates to, look at this, 98.5? We're talking what? 98.375, 98.4, raising to a Fed funds rate of like 1.5 to 1.75%. Is the Fed going to get there? There was a stellar auction today on the 2-year. So look at the 10-year Treasury bond. The 10-year was bid, TYX. The 30-year actually kind of sold off later in the session here. Again, the point being is you look at where the yields are currently for the 10-year at around 1.7%. Can the Fed raise rates to 1.7%? Look at VX, we're currently about 1.5%. Can they even get to 1.5%? What you saw today is that there's a less likelihood of the Fed being able to get there. Even though that's what they're pricing in, you can see the shift just in one day in terms of Fed funds expectations going into 2023. So on Wednesday, we're going to get their outlook. They're going to get their policy change. We're going to get some of the indication from the language of the statement and Powell's press conference afterwards. And what does this do to the market? Now, I mentioned ARK. ARK today, obviously, having a little bit better day, up 2% after selling off, literally from 125 to 70. I mean, intraday day 65, losing nearly half of its value since the November high here. Now, we saw the trade kind of lead the way early in the session. Let's look at the options market. Let's look at the unusual option activity today in ARK. If you go to the trade tab in here and you start to look at, time and sales data here, what you'll see is 8,000 contracts, the 60 and the 50. Trade Flash sometimes will give you an indication here. But my thought process on this trade for 18 Feb, the 60 and the 50 here. What my expectation, this is a long put vertical, buying the 60, selling the 50. So into today's rally, this was late in the session, right? With 13 minutes to go until the close, this trade came through, which was a bearish trade, right? Looking at what? Downside from 60 to 50. And here's the deal, folks. Be concerned that we might catch a little bit of a bid for a couple of days, but there's a good chance that we do roll over. Now, again, the question is today, is this truly buying or is it short covering? I think for a lot of the market, we might consider short covering. Some parts of the market, you look at like a stock like a Halliburton today, it rallied nicely. This is in the energy space. You see some puts sold over there. I don't know what that means, whether it was open or closing, but this was a really nice rally on good volume today. It also coincided with their earnings as well. Right, so there are some stocks that are being bought right now, and probably the energy space, as you look at oil, for example, /CL, pricing has held up very well. You look at the product depth, /CL, you'll notice that it's in backwardation, meaning prices are falling as you go out in time. Did not change much from Friday, other than the fact the price is slightly lower. Point being is that the energy market's still rather bullish, right? And the point is that with all the geopolitical stuff going on, plus the undersupply domestically, it's probably hard. And a stock like Halliburton benefits by increase in production of oil. And again, clearly the earnings played out pretty well today for Halliburton with a nice rally in the price. So again, some parts of the market are probably getting bought. The question is, are all parts of the market being bought? Probably not. ARK is certainly one of those. It would certainly be representative of a stock that may start to fade as we go throughout the week. And at the end of the close today, on that rally, we saw a rather sizable trade looking for downside potential in ARK. Now, as we look at GLD as an example, look at gold. Gold was higher today, about 0.5%, outperforming the S&P. It's been doing it for a little bit here for the last week or two. As you look at SPY plus GLD, the ratio of the two, you'll see this line is declining, and today is no different. Again, we're in an environment right now where the market is losing traction relative to gold. And with gold today, there was some bullish and bearish trade as we went on today. If you look at the time and sales, you'll see the 125 puts being bought here, for example, for 17 June. You also know 179 for a Feb 4, and there's another Feb 4 in here for a 178 as well. Point being is that what you're seeing is the near-term call buying at 178 and 179 out here, for example. Oh, sorry, wrong one. Sorry, it's a 4 Feb. Sorry, I went to the wrong one. You'll see out here at the 178 strike, the 179 strike, some buying out of the money here, near term, right? But as you start to get out towards June, we're starting to see a little bit of bearish expectation as we saw 20,000 contracts bought at the 125 strike. Point being is what? Again, there's near-term bullish pricing pressure, in particular if the market can rally here. And as we continue to rally, again, we might start to see eventually the market start to correct. Stronger dollar should drive gold down. And maybe some of those downside opportunities with regards to the June contracts may come to fruition. Again, as we circle back to the VIX today, certainly we saw the VIX spike above the December high, the December 3 high. Again, indication we're kind of reaching that capitulative phase. You look at the VVIX today, pushing above 155. Again, these are good near-term indications. We're reaching an extreme. If you look at the 3-month VIX plus the 1-month VIX, you'll see today we pushed below 1. We did intraday push below 1. We didn't finish there. But we were below 1. We came back off of those lows. But again, when you get down this area, it's indicative of support. As you look at the VIX futures, the term structure, we did finish in backwardation, and it finished actually a little more steeply towards the end of the session than it did at the beginning of the session today. A little more stretch here between these two contracts. So again, VIX futures in backwardation. You take the average of these two, 27.8 or so. You compare it against the VIX spot. You can see we're about 29. That also came in as we rallied throughout the session. But again, we're seeing the VIX in backwardation with falling prices. We take the first two contracts here, average them together, compared against the VIX. It's also trading against below the spot price, which is the VIX here. Again, indicative of near-term potential rallies in the market. So what did we boil this down to? I'm going to show you one piece here also. This is Don's expected move. He drew this on Friday. This is the expected move for the week. Notice how we touched it intraday. We rallied off of that level, and we finished right smack dab in the middle of the range. Point being here is that, right, we might get a little push here intra-week, maybe to 48, 440, 480, maybe towards 4,500. But again, we'll see maybe get some upward movement tomorrow. But as the week wears on, the risk is there. With us standing right in the middle of the range, we could go higher. We could also go lower. And again, a lot's going to hinge on the expectations that the Fed set in their policy meeting, their statement, their written statement, and of course, the Powell press conference. Now, as we look at some other parts of the market, let me just move this to the side here. /BTC. These are the Bitcoin futures. They did rally today. Of course, BITO, whatever you want to call it, BITO, Bitcoin Strategies ETF did also rally off of the low this morning. And what you saw early in the day on BITO, we'll come down to time and sales. Forgot to write it down here. But you notice the 2018 Feb 25 calls being bought. So again, some near-term bullish expectation, 225 and BITO. It's not all that high, much higher than when we currently finished today. But its trade also spilled into Mara today. So Mara also gapping lower in the open, rallying to finish near the high of the session, up nearly 4% today. Obviously a very volatile product. But Mara today, the June 125. So we come out here to the June expiration, way the heck out of the money out there at 125. So again, do you expect it to get there? No. But the realities of this was a sizable trade that did come in today. Figure 2,800 contracts filled in one print. That's on the put, sorry. The 125s. 2,100 contracts filled in one print on that June 125. This is bigger money. This is not retail money coming in and buying these. Again, providing those bullish expectations for that June. As you look at 18 March, however, right, we come in here. Again, what you'll notice is that these in the money strikes at 30 and 24 look like they were being closed out a bit. You know, also the 20, the 14, again, slightly more open interest, sorry, volume than open interest. Maybe we're rolling some of these down, possibly. We'll see if these add to the open interest here or we start to close out those puts across the board. We'll have to see. But the point is that there was some bullish trade in Mara today, along with BITO, along with Bitcoin, you know, kind of finishing the session on a positive note, still down, you know, 3% roughly, right? So, all right, so let's quickly take a look at a couple other stocks and we'll wrap things up here. But XLI was interesting today. XLI had a nice gap below support. We rallied to finish above it. Again, at support here, right? If you notice some of the activity coming through, you can see some of the trade flash. If you come to option time and sales, you'll see some of that here. Again, 1326. This got filled at the same time, 10,000, 5,000, meaning what? They bought the 102 calls and sold the 105 calls as a ratio, meaning that what? They're still carrying about 5,000 long calls and 5,000 long call verticals. So this is a ratio spread. Bullish upside here, maybe towards 105. That's about right here. Could we push through it to 107 here within the next week? Again, industrials, is this going to be as impacted as maybe some of the higher flying companies out there? It's hard to say, but this was a bullish trade here, giving you at least a potential target of about 105 in a relatively short time frame. Finally, CTXS. Oh, I forgot about SABR. Sorry. CTXS today. Earnings coming up. Looks like before the market opened tomorrow. Unfortunately, we didn't have a chance to talk about it beforehand, but today there was a bullish trade being put on CTXS. 105, 115 long call vertical. So again, some upside potential here. 105, 115 for an 18 Feb. That's the soonest expiration here, indicating a bullish expectation on tomorrow's earnings. So something to watch. Does it come to fruition? Do we start to push towards 115 is the long upside, the long call vertical here. So again, look for maybe a bullish result tomorrow morning. We'll have to wait for that confirmation. Finally, areas that could be potentially bullish. Again, as you think about, we're entering the spring here. The COVID clouds maybe parting a little bit as cases are declining. You look at the trend in terms of the UK and also the policies of the UK. Does this begin to open up travel? As a company that's involved with airlines in this case, SABR rallied today. There's been a couple of bullish trade in SABR over the past week or so. But on this case, it was the March 10. So sorry, we look at the March expiration here at the $10 strike price. We're selling the puts at 5,000 contracts to buy 10,000 18 March 10 strike prices. Again, looking for maybe upside to 10, maybe even more here in the near term for SABR. You also saw some bullish trade, for example, in DAL. Now, DAL, you'll notice over minus 18, plus 18. What you saw is a roll down from the 45 strike to the 42 strike. Again, the 42 strike happens to dovetail with the prior high in early January. Again, maybe catch a near-term bounce here towards 42. And if not to be outdone here, UAL as well. You know, it's the 46 and the 50. So selling the 50 out here and buying the 46, which is in here. Again, an indication, maybe a near-term expectation of a rally towards 46. UAL also already announced its earnings. Well, folks, that's all we got for today's video. We'll catch you back next week. An exciting day. Probably going to be also an exciting week. Have a great one. Thank you.